Picture Binance-level speed and Uniswap transparency rolled into one protocol. That's Hyperliquid, a purpose-built Layer 1 whose order book DEX has vaulted from crypto dark horse to top 15 token in half a year. Today, we'll unpack how the tech works, why whales keep buying, the risks no one should ignore, upcoming airdrop, and where the token could go next. What exactly is Hyperliquid? Hyperliquid isn't another app riding on Ethereum. It's its own high-throughput chain. Instead of an AMM, it runs a fully on-chain order book, so traders get the precision they're used to on centralized exchanges while staying trustless. Orders clear in well under a second, and the chain boasts six-figure transactions per second thanks to a custom consensus called Hyper-BFT. Right now, there are more than 170 perpetual pairs and around 80 spot pairs, with leverage up to 50x if you're feeling brave. Growth that turns heads. 6 months ago, the Hype token sat near $7. Today, it hovers around the high 30s, a five-fold move that pushed it into the large cap club. Daily volumes have exploded from $1 billion to over 20 billion, and the user base has mushroomed from a few tens of thousands to a few 100,000. Big wallets have noticed Hype is now one of the most accumulated altcoins among on-chain whales. Why traders actually prefer it? Gas-free orders. You pay trading fees only when a trade executes, not every time you click. On-chain leverage. Very few DEXs offer perpetual futures with centralized exchange latency. Deflationary tokenomics. A slice of every fee is used to buy back Hype and burn it. At current volumes, roughly 1,000 tokens disappear daily, nearly a quarter of annual supply on pace to be destroyed. No VC overhang. The project's self-funded, so there are no venture allocations waiting to unlock and crush the chart. Put it together, and you have product-market fit. You can literally measure by watching tokens turn to ash. Let's check out what's under the hood. HLP Vault. Think of it as a community-funded market maker. Users deposit assets. The Vault algorithmically provides depth and even scoops liquidations at a discount, recycling profits back to depositors. Hyper Assistance Fund, protocol revenue that isn't burnt, can underwrite community grants or emergency liquidity, and those flows are all on-chain. Hyper-EVM, a freshly launched EVM layer, lets new projects deploy smart contracts that plug straight into the order book, so a token can launch with CEX-grade liquidity on day one. The bear case you shouldn't ignore. Validator concentration. At launch, the network ran on 4 validators, all team-controlled. That count has grown slightly, but foundation nodes still stake the lion's share of Hype. Centralization risk is real. Closed source, for now, validators run a binary provided by the team. Code will open source when stable, but today that's a single point of failure. Security battle testing. A recent exploit tied to price manipulation and nation-state linked wallets shows that fresh chains are juicy targets. Speed versus decentralization trade-off. 100,000 TPS feels amazing until regulators or attackers lean on a small validator set. On-chain Binance works because it's occupying the gray area between full decentralization and pure centralization. Where could Hype go next? Base case math. If Hype simply tracks Bitcoin to new all-time highs, many analysts see $70 to $100 as achievable this cycle. Moonshot scenario, matching Solana's current market cap, implies roughly $290 per token. Ambitious but plausible in a euphoric blow-off top. Key catalysts for Hype. Hyper-EVM attracting blue-chip DeFi apps. Expanding the validator set while open-sourcing code. Continually rising volumes, which accelerate the burn. Strategy takeaways. Treat Hype like an early-stage exchange token. You're buying a slice of trading fee revenue. Size your position for volatility, Exploit headlines can nuke price in the short term, so ladder entries and buy dips. Finally, keep an eye on the burn rate. Faster burns signal growing demand. A slowdown could mean momentum fading. Now let's look at the Hyperliquid airdrop that's going on soon. Heads up, farmers. Hyperliquid just opened Season 2 of its Hype airdrop. Here's the cheat sheet to farm it like a boss. 38.9% of supply is reserved for community rewards. Only a fraction has been claimed. Season 2 incentivizes usage of the new Hyper-EVM. Earn points by trading perps or spot, depositing to the HLP liquidity vault, bridging assets into Hyperliquid, using any dApp on Hyper-EVM. Weekly snapshots turn points into airdrop weight. Quick checklist of what you need to do. Bridge 50. Execute 1 spot and 1 perp trade. Stake in HLP for 24H. Interact with a Hyper-EVM dApp. Share a referral code for bonus points. Boosters. Trade during high-volume days for 2x points. Provide both long and short liquidity. Keep funds on-chain. Withdrawals reset streaks. Timeline. Season 2 runs until Hyper-EVM clears its first mainnet audit. Target late Q3 2025. Claim will be gas only, no KYC. That's all in the airdrop. Let's do a quick wrap-up. Hyperliquid could become the blueprint for high-speed, community-owned trading, or a brilliant experiment that flies too close to the centralization sun. For now, traders are voting with their wallets, and the chain is literally on fire. Trade safe, stay curious, and I'll see you in the next one. But remember, nothing in this video is financial advice. If you have enjoyed this video and learned something, please like and subscribe to the channel and follow me on X at Aquifer007.